Hi everyone, in this video I want to show you and share with you an indicator, a very powerful indicator that is called Swing Points and Liquidity by LeviathanCapital. This indicator, as you already know, see in the chart, you will see that it coincides or it seems like a heat map. We know that there are out there a lot of platforms like Trading Light that offer paid services to use heat maps in their, let's say, platform. And natively, TradingView doesn't provide a heat map indicator. So this Leviathan that creates indicators for crypto trading has created this indicator that, let's say, it marks the swing points that has a lot of, let's say, important in the market. And by the way, it also displays the levels that are, let's say, acting as support or resistance where the liquidity is clustered or concentrated. So to use this indicator, you go to the TradingView dashboard and you click here on indicators and you type swing, okay? And here you see swing levels and liquidity by LeviathanCapital, and it has 3,000 people that are using almost. So you click, and I have already clicked, and now you can go to the settings here, okay? We click settings, and you have here many options, okay? So by default, it comes this way. I like to reduce these parameters here to 4, okay? Because this way it shows more liquidity levels in the chart. This way you can, let's say, make it look more like a heat map, okay? So maybe we can switch to 3, okay, for example. And also here it says show boxes, yes, show lines, okay, show labels, okay, extend until fill. This is very important because, as you should know, as you see here, when these levels here are filled, it are, let's say, mitigated so they don't go farther into the chart. And as we see right now, for example, now there are a liquidity point here in the above the price at $40,000, and also there are a lot of liquidity points below the price are $26,000. So this way, when the price reaches these levels, are automatically mitigated. Also, you can, let's say, base these parameters based on open interest and also on volume. So you can show, for example, the open interest delta. This is the open interest delta, and also the volume. Show volumes. If you click in show volume and click on OK, you will see that before there wasn't any numbers here, and now we have numbers. These numbers means the volume of BTC, in this case is Bitcoin US dollar on Binance, the amount of volume of BTC transacted, or let's say traded, in these areas. So for example, here we have this swing point at the bottom before of the push higher of Bitcoin, the recent push higher. We have 393 Bitcoin traded there, okay? So very important to turn up this. Also, you can switch off the volume and show the open interest if you prefer, okay? And you will see the open interest that was traded on those swing points, okay? But I prefer to use volume, okay? Then the colors, I will leave it as default. Also, you can change, for example, the lines from dotted to dashed, okay? This is personal preference. I don't want to mess with this, okay? And also a very important feature that you have here is the exchanges where this indicator is taking from the open interest data, okay? As you see in here, there is a setting that is called open interest, and you see that it's taking the data from the perpetuals of Binance with the USDT pair, BUSD pair, also on BitMEX, the USDT pair, also on Binance, the USD pair, PERP, BitMEX and Kraken, okay? So you see the exchanges that from where this indicator is taking the actual open interest data. Okay, and here you can change this preference, but I will leave it. The only thing that I will take into account is to show the volume, and I will leave it everything like is from the default settings. Okay, maybe you can, for example, change this to 1 to see more the swing points. Okay, to see the liquidity. But okay, we click OK. We click OK, and now we are going to see the chart. And as you see right now in TradingView, we have almost converted or changed the appearance of our of the normal TradingView chart, and now it looks like more like a heat map. And I can confirm that these levels that this indicator displays here often coincide with a lot with the points where the people put their stop losses. So because if you want to short here, for example, this top here, you always, what the traders often do is to put the entry, for example, here after the wick, and then the stop loss right after the last swing point, right? So if all the traders, because the 99% of the traders do this same strategy, they are generating liquidity there. Okay, so this is generating a pool of liquidity there that is probably attracting price and is probably going to get mitigated. And also, when in the opposite side, now that we have a push higher, a lot of traders that enter here, for example here, they put, let's say here this way, and they put the stop loss right below the last swing low. Okay, so they do this way, and this indeed is generating a pool of liquidity around these areas. Okay, they are generating liquidity around these areas, and these areas coincide with the swing points that is, let's say, displaying the indicator. So I wanted to share with you this indicator because it's an indicator that I'm not using right now, because let's say for me is very, I know where the liquidity is just looking at the chart. I don't need an indicator. But if you are a beginner, or you are, let's say, starting with crypto and starting with trading, this is going to make a lot easier for you to let's say to identify or to see where are the liquidity pools or the liquidity clusters that are most probable to cause a bounce or a rejection, or are probably going to attract the price. Okay, and also as you already know, there is the popular, let's say, the popular belief that heat maps are a very professional tool that has a lot of info. Okay, and this is not entirely true. Okay, heat maps are useful, but also heat maps are just a representation of the order book. Okay, there is an order book with the book of orders, as the name says, and the heat map just displays this liquidity, these orders in real time in the market. And oftentimes, the 90% of the times, these levels of liquidity coincide with these swing points. Okay, because as I already said, most of the traders do the exact same setups, and they put the stop loss at the exact same points. Okay, so this is not entirely true that it's a heat map, but it looks like a heat map, and you can use it as a heat map. The difference is that in a heat map you have the downside, that you have spoofing, and spoofing, as you should already know, is when, let's say, one market participant or various market participants create a cluster of liquidity in the order book. Thus, this cluster of liquidity is shown in the heat map, and then when this level of liquidity is going to get filled, they remove the order. So they are spoofing you. They are making you think that there is a support or a resistance, but indeed there is no support or resistance, and they are manipulating you to think that there is something there that there is not. Okay, so that's why I don't use heat maps, but because they are very, let's say, very prone to manipulation. by spoofing is a very common thing in crypto, so it's very confusing. And also I'm very minimalistic when I'm trading, so I prefer to use the less or the least indicators, and I want to select few indicators but very powerful indicators and very clear indicators. Okay, but I encourage you to follow me on Twitter at trading_soldier, and where I publish a lot of videos, short videos. I publish my ideas on the market, I publish my setups, my trading setups, my trading ideas, also a lot of analysis on Polkadot, EURUSD, Bitcoin, okay, and I share also news for free. So I think that you can learn a lot from my Twitter. And also, if you want to learn more about trading and becoming a better trader, I encourage you to visit my website trading-soldier.com, where you can find a lot of free articles. You don't have to pay a dime here to understand better trading and to learn trading strategies, and also to learn how I do my trading setup. So you, for example, can see a coin analyze tutorial. I made also another videos talking about other indicators. Also, I share my trading strategies, trend lines, price action, Heikin-Ashi. And if you click here in Learn More, you can see a lot of articles that I publish. Okay, for example, the Bitcoin dominance. I explain a lot of things for free, 100% for free. So you don't have any excuse to don't become a better trader. And also, as you can see the video that I publish, and also you can see the written format of the article. Okay, here in the same article that I'm now explaining, you see the same indicator that I'm explaining in this video. Okay, the swing points and liquidity by Leviathan. And you can see also the images where I explain the concepts that I am sharing in my website. So follow me on Twitter, visit my website, and as I said, also give credit to Leviathan for publishing these awesome and very useful and powerful indicators for free, because also he's doing all this work for free. So I encourage you to search his name and see his indicators. Okay, I think that I will review a lot of his indicators in the future. So I just wanted to share this indicator because I think that if you are a beginner, it will help you a lot to see where the price will be heading into the next levels. For example, let's make, to end this video, a quick example. Okay, we can see that now the price of Bitcoin pumped, and here we have a lot of liquidity clustered around $40,000, $42,000. Okay, so maybe price wants to go to this area and then is rejected, because when an area is mitigated, then it goes to the opposite side. Okay, oftentimes, usually. Or maybe now we nuke and we go to mitigate this liquidity. Okay, that is sitting below. Also the liquidity at 15K. Okay, you need to think about this as, let me, if I cannot draw a magnet. Okay, don't worry, but you should think about these clusters of liquidity, where you see a lot of lines that the indicator is displaying. You need to see them as a magnet from where the price is heading to, or where the price is being attracted to. Okay, so I don't know where the price is going to do, where it's going to go, but the probability is theirs. Also, this indicator is not the holy grail from trading, as I already say. You should combine this indicator with volume, with EMAs, with the price action, switching between Heikin-Ashi candles as I do. Okay, one indicator is not giving you the perfect entries and the perfect trades. It's just giving you one more piece of data to help you understand better the charts. Okay, so that is for the video. I hope you like this video, and as I already said, follow me on Twitter and visit my website, and we see you on the next video.